this example, what we are going to look at is we are going to look at the second best performing stock in the US market in 2006, and that is ITKG, which moved from around 25 cents all the way to $4. Now remember, all this technical analysis should be able to work in any stock market, any price range, anywhere in the world, because ultimately this is just a reflection of our human psychology and how to catch trends that can make us money. Now, so we see here that a stock jumps all the way from 25 cents, goes all the way to as high as 80 cents, settles down for, makes a weekly closing high there, and then settles down for the next 2 weeks as shown by the red bars, and then on the 4th week it moves to new highs, and that's where you want to buy the stock. Again, the stock takes off, makes a 2-week rally, and takes another 1, 2, 3 weeks of rest, and on the 5th week it breaks out to new highs. Again, that's where you want to get in. The good thing is you know how to get your entry into a stock. You don't have to chase anything. You just wait for your alert to come when a stock is making new high, and you jump in. Again, we see here the stock did rally very well. It jumped from around 90 cents and went all the way to $2 for a huge, more than 120% gain in 3 weeks. No point to chase the stock at that time. Wait for it to settle down for a couple of weeks, and as you can see, the stock does break out here again. Actually, let me show. It forms a nice bullish wedge right there, and then breaks off to new highs, and you want to buy the stock right there for a good and you doubled your money probably within the next 3 or 4 months. So again, just timing is everything, and you can now find your way into great stocks by waiting for them to settle down before they take off again. The next example we're going to look at, the top. By the way, let me just go back to ITKG. This was one of our best stocks in 2006, as we got in here at $1 at 69 cents. Moather.com got its members in during that breakout, the first breakout, so it did well for us last. The next example we're going to look at is the best performing stock in 2005. Again, Moather.com subscribers got in on this play way around the $3 region, and again when it broke out above $7. But that's besides the point. The point here is, how do we time our way into hot stocks? So NTRI was the best performing stock in 2005 in the US market, and we're going to look for some points where the stock gave us fresh entry points after it had been on a rally and was going through a rest period. So that you can see here, after we got in here, the stock rallied, probably doubled in 4 months. It settled down for 2 weeks, and then on the 4th week, right here, shown by this arrow and the volume, by this huge volume here, the stock took off again, and there was really no point for you to chase it around here. All you need to do is wait for it to settle down, and it did make a high right there, and it settled down for a couple of weeks, and actually on the 9th week it broke out again, so that could have been your new buy point. So again, no need to chase a stock, just wait for it to rest, and once it gets started on a new journey, you just join it. Again, it breaks out there, that was a good buy point, and then rallies for 2 weeks, settles down, and then for 1, 2, 3 weeks, and on the 4th week it breaks again breaks out again to new highs. Again, that was a good buy point, a good example on how to time stock. Now let's take a look at the best performing stock in 2004, and that is LNG, which again, on this example, what I'm just trying to show you is that not all 4-week breakouts will make you a ton of money, but they can make you some money. Like in this example, even though Mother.com subscribers had been participants of this breakout here, the stock did well for the next year, and those who were waiting to get back in the stock later on towards the end of 2004 and early 2005 got a nice entry point here, because right here you don't want to chase the stock, as you can see, because of this up and down gyrations. What you need to do is wait for the stock to make a new high, which it did right there. It settled down for on the second week, the third week, and the fourth week before it broke out on the fifth week right there. So we have a week 5 breakout. So you buy the stock at that point,